morning and good evening, everyone. Hope all of you are doing well and are safe. I'm going to cover two topics. The first on shareholder value creation and a connected topic on our ESG vision, which speaks to the larger shareholder value creation. So if you see, and as what Salil mentioned, around our consistent execution of our strategy, our growth rates over the last 3 years continues to be industry leading. We were near double-digit growth last year, and even in 2021, in the year of COVID, in the first half, we are one of the only few large companies showing continuously showing growth on a year-on-year basis as well. Speaking to all the building blocks which we put into place during 2019 and beyond our navigating your next strategy. If you look at our operating margins as well, we made our investments in 2018 and 19 around our new navigating your next behind localization, our pyramids, our large-scale reskilling. We saw some impact of that in 2019 and going into 20. And clearly our guidance last year of 21 to 23% was demonstrating our stability of our margins. And of course, in this year, we have, of course, done better than that with some puts and takes, which I will talk to you a bit later in my presentation. So all in all, I think this is a very competitive growth, competitive performance, and we are quite pleased in terms of our track record of executing on our strategy. If we look at the cost management exercise, which we did at the beginning of COVID in the early part of March, these were under three buckets, looking at the uncertainty of the impact of COVID on our clients, on our own business model. The first was around what we call the cost deferrals. These were largely temporary deferrals, which we did in terms of cost promotions for our employees, in terms of our hiring, in terms of our compensation hikes. And of course, as you know, we have now rolled these back with our pay hikes now coming into effect from Q4. Our promotions, of course, we started back in Q2, and hiring, of course, both on freshers and lateral talent has, of course, commenced as well to support our volume growth. The second, which we call the more temporary benefits and the cost deferrals in terms of cost reduction. These are more active cost levers which we have deployed. Some of these, of course, naturally because of COVID have come to the fore, like travel and visa costs. But some we have actually worked on in terms of our marketing, brand building costs, facility costs, and other professional charges. We think some of these are, of course, on a more permanent basis here to stay as remote working picks up. And some of these will, of course, come back as we open up these expenditures again. And finally, our strategic cost levers, which we've been always talking about around onsite offshore mix, automation, subcontractor costs, operating leverage, which I will talk to you in more detail. So if you see our first around AI and automation, I think one thing is very clear as we look ahead. The AI element in our automation exercise becomes much more rigorous as well. If we need to get sustainable automation benefits, this has to be backed up by sustainable AI as well. We've talked about an example in front of you around how a typical bot has been built in our automation factory. A call lands in a call center. It's on a ServiceNow platform, and our bot basically picks up what is the nature of that call, what was the intent of the call, looking at past algorithms, and giving a resolution of what is the most likely resolution for such a call. We've built a bot factory with about 3,000 active bots and growing every day. This has been rolled out across our delivery teams who now can use these on similar activities rather than rewriting automation programs for each and every business case. So I think on a sustainable basis, we think this is leading edge practice. We have, as you know, delivered over 20,000 FTE savings and repurposed them over the last 3 years, both giving these back as savings to our clients or giving these back to the bottom line of the company. The second initiative around our on-site mix, as you know, this is something we've been continuously looking at over the years, and we're seeing a steady improvement. Part of this, of course, in the last quarter due to the COVID impact, but we believe as we take new deals, new large deals, the proportion of work over the period of time can be offshore continues to increase, and that's the trajectory we have seen. On the pyramid side, both on the on-site and offshore, Historically, on-site pyramids have been much more steeper, but with our strategy on building out our 6 innovation hubs in the US and in other geographies, and our ability to hire freshers in mass from local community colleges, we believe we can continuously improve the pyramid both on-site and offshore, and we have seen that continuing over the last 6 quarters as an index, as we see that benefit as well flowing into the bottom line. In terms of our subcon costs, we continue to be one of the lowest in the industry in terms of utilization of subcons as well. And you can see the trends, we are down to 6.6% in our subcons. And our approach to subcons is actually not in terms of reducing the intake or the ingest of subcons into our businesses, but how fast we can replace these subcons either through hiring or through replacement with our own employees. Subcons, as we know, have a place in the business because of either talent shortage or in terms of lead times. And therefore, we still believe it's important to get subcons into the business, but rotate them out as fast as we can so that we can reduce the cost impact. And finally, on SG&A costs, we can see a continuous improvement through our operating leverage, and we continue to invest back in frontline GTM and other frontline marketing activities with the benefits we get from our operating leverage. So through some of these examples of these strategic levers, as we mentioned last year, we've delivered a target. We had a target of about $150 million, and this year we are well going to exceed that. An important discussion point, I think, in a lot of people's mind is what does this new remote working from home, working from everywhere, bring to the business model as well. Now, these are early days, but I think all in all, the impact of this is quite beneficial to the larger IT and services industry, while it needs to be seen in terms of what will be the real financial impact, and that's something which will play out. But if you see from a positive impact, I think most importantly, this will increase the availability of talent across and in all geographies which we operate in, both in India and on-site. The availability of getting more people from tier 2, tier 3 cities, rather than just looking at tier 1 cities where the hubs would be existing and where our DCs are. Similarly, ability to attract more talent in terms of gender and giving that flexibility to women workforce to join the digital economy. We can also at the same time with remote working from home, and as you know today, more than 99% of our work has been delivered over the last 6 months from home, thanks to our investments in Agile and DevOps. And therefore, clients who would prefer to be in the same time zone can we can work out of our innovation hubs, we can work out of nearshore locations as well. As you know, travel is something which has seen a massive reduction, and we've been able to pivot our go-to-market on a virtual method. Mohit has talked about that in his presentation, and we've been able pretty much to sign up about $3.1 billion of large deals, virtually through a video call. So I think that's some of the benefits in the long run which we would be able to see. And finally, in terms of facilities and infrastructure, we pride ourselves with our campuses, but over a period of time, we say that a lot of the work can be done from home. In fact, as part of our ESG vision, we've announced that about a third of our work in the medium to a long term can be delivered from home, and consequently, we would see some benefits of that onto our P&L as well. On the other hand, this will still require work from home, will require investments behind communication, behind IT infrastructure, behind communication platforms, behind collaborative tools as well. And of course, this will require permission of clients on a sustainable basis. But I think all in all, this is something which the industry can look forward to in the new ways of working in a hybrid model. Moving on to our capital allocation policy. As you know, last year, we revised our capital allocation policy to pay out more money to our shareholders and to give more predictability in their returns. So we increased our payout from 70% of our free cash flow to 85%, and also over a period of 5 years, so that we can have a sustainable payout policy as well. Consequently, we have increased the focus in terms of our cash generation inside the company, as you can see, with steadily increasing cash flows. And in fact, this year, with a combination of higher margins, with a combination of higher, tighter working capital management and lower capex, we have been able to increase the first half of cash flow by over 60% on a year-on-year basis as well. So consequent to that, if you see our dividends, we've been consistently increasing our dividends over the last few years. In fact, last year during FY20, of course, we took a pause in terms of our dividend payout due to the uncertainty of COVID. But I think we more than made up for that with a 50% increase in our H1 dividend over the last year as well. If we look at our overall shareholder returns, which is something we monitor very closely, this is also something which is inbuilt into our management compensation plans. We continue to lead in terms of our rolling 3-year TSR. This is both from a return perspective, 120% return over 3 years. I think industry-beating returns, both in absolute and competitive returns as well. So this is something which we believe is as a result of this consistent strategy we have deployed and the building blocks on our navigating a next strategy, which is helping us win in the marketplace as well. But moving on to our ESG, this is something we have just rolled out, as you would have seen in our press announcements last week. Infosys has always been at the forefront in terms of sustainability and taking sustainability targets which are ahead of the curve. Consequently to that, we've also announced our ESG vision of 2030 and also are meeting our carbon neutrality target in 2020, which is 30 years ahead of what we had announced in the Paris, as per the Paris Accord as well. We believe we are one of the few companies in the world to achieve this in terms of our holistic approach to carbon emissions and neutrality. And most of this, in fact, entire part of our carbon neutrality is meant through community projects and not through carbon credit purchases. Some of the highlights of our carbon neutrality is we've achieved about 25 million square feet of LEED platinum rated infrastructure. Our electricity across our campus, about 44% of that is through renewable sources. And over the last 12 years, our per capita consumption of energy has come down by about 55%. Like I mentioned, our carbon neutrality is 30 years ahead of the targets which have been set by the Paris Agreement. Some of the achievements on our larger ESG over the last 10 years, you're well aware of what we've been doing on our diversity. We are now 38% of our workforce is women, employees, 22% on the board as well. If you see a community record in terms of our Infosys Foundation, we spend over $55 million a year across in terms of our giving back to the community and supporting the UN SDG goals where we operate as well. Our local talent, we have over 144 nationalities, and nearly 92% of our hiring is local talent of local origin as well. And our rewards, which we've seen across, and our recognition, number one is from the UN. I think, again, one of the few companies which received the UN Global Climate Change Award. We are part of a number of ESG ratings across the world, and also in ESG fund indices where Infosys is a part of as well. As you also know, in 2019, we were recognized by Forbes in terms of the global respected company list being number 3 as well, which is something we are very proud of. Looking ahead in terms of 2030, I think we were very clear that our purpose has to be, in terms of our sustainability, has to be deeply entwined with the way we do business in the long run. And these two cannot be independently seen in terms of value creation and our sustainable purpose, which is why our 2030 vision is more holistic and speaks to all the 3 pillars of environment, social, and governance. On the environment side, whilst we continue to profess our carbon neutrality year on year, in terms of further stretching ourselves, we have decided to take absolute targets in terms of reductions of our emissions, both on scope 1, 2, and 3 as well. On the social dimension, I think 2 important parts in looking at our business model. One is, of course, reskilling and that digital talent at scale. We are all aware of our Lex platform where we train our own employees in digital skills. And we think it's important that we take this beyond our immediate employees to our clients' workforce, and of course, largely to also to the population in countries in terms of students in colleges and high schools as well, And to that, we are launching a new program in India as well on digital talent, which we will take across the country. Similarly, in terms of diversity and inclusion, we are already one of the leading employers in terms of diversity at 38%, which we will take up during this period to 45% as well. On the energizing local communities, we've talked about 1/3 of our work in future we believe can be delivered remotely wherever employees are based and in a remote home environment, which we think, like I mentioned earlier, will help both in attracting new talent as well as helping in our workforce diversity and our cost structure. And finally, on the governance and vision, two important call-outs is on the data privacy, which is becoming very, very critical both for our employees and for our clients' data, which we handle, and how we will adopt leading practices on data privacy, and also on information management, where we have a securities information security practice, how we will work and adopt information practices which are leading across the world. We think this ESG vision, which is quite path-breaking in the context of the environment we operate, is something which we will continuously challenge and look forward to. And we think this can set a good milestones for other companies to follow in terms of their ESG visions as well. So with that, I would like to wrap up my session for the evening and hand over to the moderator. Thank you.